Good morning and welcome to episode 685 of Talking Bull. I'm Steve O'Hare and today is Monday, the 12th of September 2022. In this stream, we're going to cover the main headlines. Then going to dive into some technical analysis across the markets, multi-asset analysis, and then we're going to have a little bit of fun with the gun-to-head challenge and finish off with the calendar. So we're going to dive straight in to the major headlines that we're seeing at the moment. So Kansas City Fed President George stated that she prefers steadiness and purposefulness of rate hikes over speed, which suggested she would back a 50 basis point rate hike. Fed Governor Waller stated that he supports another significant rate increase this month as inflation is far too high and it is too soon to say whether inflation is moving meaningfully and persistently downward, with rate increases needed until at least early next year. The hawkish rhetoric suggested that he would back a 75 basis point rate hike. There's further hawkish ECB rhetoric over the weekend, with comments that policy would need to go into restrictive territory. ECB sources also suggested that the central bank are likely to debate the starting of quantitative tightening and bond sales at next month's meeting. Canada reported an employment decline of close to 40,000 for August, compared with expectations of a small increase, and the unemployment rate increased sharply to 5.4% from 4.9%. So big employment figures coming out of Canada. Japanese officials continued to warn over excessive yen moves and repeated the threat of intervention, although the rhetoric had little impact given expectations that the Bank of Japan would not adjust its very loose monetary policy. And UK GDP increased 0.2% for July, slightly below consensus forecasts of 0.3% as industrial production declined in the month. The overall impact was muted as overall risk conditions held firm. So that's the headlines. Let's dive into some analysis. And I'm going to make myself a little bit smaller so we can get a little bit more of a view on this. Right, Bitcoin. We're going to start with Bitcoin. We are going to start and show you the weekly chart, which is interesting. As we've been talking about over multiple shows, this support area that we've got between 17,600 and 19,500 has held, and we posted quite a bullish, almost bottoming formation where we see price action drive down. An inverted hammer posted a couple of weeks ago, and last week's candle was very positive indeed, where we saw prices dip down below the previous weeks, hitting a low, the lowest levels we've seen since the 13th of June week, and then rallied higher and engulfed the previous 2 weeks price action. So that's looking pretty good on the weekly chart. On the daily chart, we can see that today's price action looks to be stalling after Saturday and Sunday's moves, and we have stalled at this previous the bottom trend line of this previous bearish flag formation. So here we've got a trend line moving higher, and we can see the price action stalled just in front of it. The high 22,350, and now we're back to 21,838. Forming a doji candle at the moment. Still a way to go before the end of the day. So one of the interesting candles I wanted to pick up on was this shooting star candle on a 4-hour chart. This is the 1 o'clock to 5 o'clock time frame, and we have seen prices bounce back a little bit in the next 4-hour candle, but quite a rejection on a short-term basis. So that could dominate. We'll have to see how the next couple of 4 to 8 hours price action reacts. Support coming in really 21,135, a break of there that could open up a little bit of pressure to the downside. Otherwise, really need to recapture that ground above the 22,350 to see what further resistance we can find above. Taking a look now at commodities. we'll look at gold straight away and look at the price action on the weekly chart. We had a support hold very similar to what's going on in the Bitcoin. Long-term support has held, and we saw a nice little positive week last week, although we pared back from the highs. We got up to 1730, closing at 1717, slightly above that Monday morning, so a little bit on the front foot as far as the weekly is concerned. Nice reaction from here. Let's get rid of this. We are still in a bearish channel, and we can see how well this support and how respected we need to be of it. Potential now for a little bit of light relief, a little bit of really looking to sort of like see if we can get above 1730. The main resistance would come in the form of the downward trending resistance line. That's up at 1757. And 1765 was the swing high from the 25th of August, so their levels to watch above. And obviously down below, a break of 1678 would open up the downside dramatically and would confirm a double top formation on gold. So be aware of that. They're the levels to watch really on a short, medium term basis. Silver, same sort of price action. We're bouncing off supports. The supportive area we picked up, it's a little bit lower than the gold support levels on a comparative basis, but we picked up from this price action way back in June 2020, and we've stalled in that area and rallied quite nicely over the last 4 days. And looking to target resistance coming in at $19.40. Support is down at 1760, and further upside looks expected here, but obviously need to get over that 1945 hurdle. Crude oil has bounced back over the last couple of days also, and again this formation looks a little bit like the Bitcoin formation on the weekly chart. We would call it a morning doji star formation, and it's played out really nicely. This should lead to further upside. We're above the 85.40 level, which was the level of support that we broke through back on last Wednesday's after the oil inventories, and yeah, we've got back nicely above there. So really need to see if this is going to hold or not. If we look at a 4-hour chart, could see a bit of a potential bottom forming here. Still a lot of work to do though. Support really coming in now at 84.80, resistance up at 86.70, and then we'll be looking at $90 level for the WTI crude oil on the resistance front, but potentially forming an inverse head and shoulders. But as I say, a long way to go for that to play out. Brent crude oil levels to watch here. We've got 92.55 as the most recent swing high. Above that, 96.58. Support coming in down at the lows at 86.80. Natural gas has reversed nicely from the head and shoulder formation posted after we hit the serious resistance level up around about $10, and yeah, moved nicely downwards. Again, potential for a correction, potential inverse head and shoulders here. Let's see if that plays out. Really need to get a close above 823, or even better 832 on a 4-hour candle. That could give us a little bit of a heads up that we could be forming an inverse head and shoulder. Measured move target for this type of move, 780 up to 830, looking at about 50-cent rally on this, or a 50-cent measured move target. That would take us up to around about the 880 level, which was decent support before, and will now turn into resistance. Covering off, let's go and have a look at what the dollar's up to. Dollar index. We've seen dollar top out now. Last week's price action, not quite a bearish outside candle, not far away from it, but we've seen this negative price action from last week continue into the start of this week. And so we're looking at really where support is going to come from. We've got this really nice trend high. This is the weekly chart, and support really around about where we're trading now, all the way down to 107.65. So 108 down to 107.65. That will be the support in the dollar index on a weekly basis. But as I say, nice rejection up here from the highs that we saw posted, 20-year highs coming in at 110.78. Nice rejection from there. On a daily basis, we've got a little bit of a trend line we can look to, which has formed 1, 2, 3 points, looking maybe for a fourth, or if you combine this, we could say it's just 2 touch points. But yeah, support for that coming in down at the 106.50 area, and the more major trend line support a lot lower, around about the 100 level. So yeah, last 4 days of price action have been negative, and doesn't look like it's going to slow down just yet either. Support coming in at 107.65. Take a look at the majors. This has obviously led to some relief for the euro and sterling, and we can see that the price action has stalled around about the 98.60 level, and we've pushed above parity and beyond. So euro dollar back up to 1.017, looking really to, sorry, that's 101.70, looking really to approach resistance now, coming in around about the 102 level. Above that, 103.60. But yeah, nice bullish engulfing candle posted on the 7th. That's last Wednesday, and since then we've seen quite moderate upside drive on the euro dollar. So yeah, a little bit of no real change in the medium term outlook. We still are bullish of dollar at the moment, but seeing just a natural correction in these markets. Similar sort of price action in sterling dollar. Posted this, you could call it a bullish hammer, but it is sort of like slightly into the price action, so not quite, but we've had similar sort of follow through that we'd expect from a bullish hammer. So a nice little reaction bounce from the 114 level, and we've already been up to 116.87 this morning, and no signs of that slowing down. Resistance we'd expect coming in at 117.70, above that 119, and the 120 level would be a bit of psychological resistance also. Dollar yen has now turned around from the swing highs. Let's take a look at the weekly chart, actually, just see, compare it to where we've been previously. Have sort of like levels we've seen, 1998, we've been up to these sort of levels. So, you know, a 22-year high, and price action just seems to have stalled ever so slightly. We got a nice reversal last week, the week of 5th of September, from the 145 area, and this week we seem to have also found a little bit of resistance, a little bit selling coming in. The Friday's price action was bearish engulfing candle on there, breaking down below this like really steep trend line. A more ideal trend line support would be at this angle, where we've seen 1, 2, 3 touch points. That is all the way down currently around about 135. Whether we got potential for that sort of reversal, we'll wait and see. But yeah, keeping an eye on this. We've had a little bit of a bounce this morning. If we look at the shorter term charts, just to sort of drill down to how decent a bounce that is, not too bad at all. A little bit of an ABC correction, but also the 7 o'clock candle has posted a bearish outside candle, which is negative. So this could be the opportunity for the dollar bears to drive dollar yen lower. They're the couple of markets that I wanted to cover on the FX side of things. Let's dive in to indices. So indices playing out last week. Let's take a look at the S&P. Saw a really nice, strong reversal last week. Bullish outside candle, and we've started off on the front foot this morning. We're trading up close to the 4,100 level. Last week we actually got down to 3883, and we've seen, yeah, as I say, nice bullish engulfing, bullish outside candle on the weekly chart for S&P. So overall, we still remain mildly bearish on indices, but when these natural reactions will occur as we continue this move lower. Downward trending resistance coming in. That doesn't look too bad at all. That looks like 1, 2, 3 decent touch points, even fourth touch point, fifth touch point here. So we can see that price action probably looking to find some resistance up at these levels. This is 61.8% fib. Let's see the 50% fib. Where does that come in? That's coming in around about 4,137. But above that, the major resistance for me would be around about this 61.8 level. Nasdaq, similar sort of reaction higher. Bullish outside candle we saw on the Wednesday, and decent price action higher, and prices moving higher even this morning, getting up to 12,675. Resistance really looking at higher levels, 12,950 to 13,000. But yeah, overall, pretty positive price action, and expect that to continue. But again, we'll be looking for opportunities to sell into this strength, really looking at selling opportunities as we are negative on indices for the medium term. Just quickly looking at Dax and Ftse, the two major ones from Europe and the UK. Again, similar move that we've seen higher. We went through the 78.6% fib retracement level, but managed to sort of like recapture ground above that. We've moved higher now. So let's take that out of the equation and really sort of focus on Fibonacci levels to focus on in looking at fading this rally. Again, we can draw a nice little downward trending resistance line. Let's mark that up. There we go. That comes in around about the 78.6 resistance level, all the way up at 13,750, just above there. So levels to watch. We've had a gap open this morning, so maybe expect a little bit of a pullback before the rally continues higher. On the 4-hour chart, we can see this little gap on the charts here. Price action forming hanging man candle. So that looks a little bit ominous. We could see DAX correct quite quickly into this morning. Ftse a little bit different. We've seen a nice little bottom form on the 4-hour chart. This is taking a look at the weekly chart. Let's nice bullish harami on the weekly chart, and on the daily chart Friday we can see price action really sort of corrected nicely higher, and we've on the front foot this morning, however, doesn't look as promising as the US indices. Are we forming a bullish flag here? Potentially, yes. The shooting star candle needs to be taken out. The high there coming in at 7,401. Really need to take that out to sort of offer a little bit more potential to the upside. If we fail here, looking for support at 7,345, really as the marker for whether this will continue higher or not. So a little bit mixed with the Ftse, but yeah, DAX potentially topping out already this morning. So that really, for me, feels like quite a decent gun to head trade idea. We'll sort of, I'll give you a little bit of an indication of what that means. We each morning, normally there's 2, 3, 4 of us here. We pick a trade live on air. We look to place a stop on a target, looking for at least a 2-to-1 risk reward ratio. which is pretty difficult, as you may be fully aware in these in any sort of market, especially over at a really short-term basis. Trades expire at either 9 p.m. or if the stop target is hit, and we bring the performance up to date next week. Joe's the man with all the stats and the figures around that, and he'll share that with us next week. But we'll keep a track of it. We post these trade ideas live on our platform, so we'll run through it now, and I'll give you a little bit of an idea. And now, looking at all those markets, the one that really stuck out for me was the DAX, and potential for really an overextension here on the short-term chart. This is what we can see here. There's a gap on the chart, so potential for a pullback lower. We are at quite a decent resistance level. We can see this was a support level before, the 13,200. So looking to fade into this, go a bit contrarian. We've seen a nice correction, and overall this could be more of a retest of the break of the neckline, which is around about 13,050. So if we look at it on a hourly chart, we've posted a double bottom. You could even see maybe a treble bottom or quadruple bottom in here. But this double bottom, the major one, we've broken through the neckline. So wouldn't be surprised if we get a retest of this level before prices continue higher. So yeah, small pullback maybe, opportunity to buy. So if I was looking, if I had a bit more time with this and wasn't, the idea of this would be to sort of like really the idea of the whole gun to head is to sort of like call a trade live. If I was to really sort of like put a bit more strategy behind this, I'd be looking to buy dips around this 13,050 level, but we're really sort of like on the front for this morning. So I'm going to fade into this, so really go against this trend, but only on a short-term basis. So can have quite a tight stop on this. So looking for a pullback. Only really looking for a 2-to-1 risk reward on this idea, and again that expires at 8 o'clock. So and looking to come back to this area, and maybe that's where we see more serious buyers come in. So selling it around current levels. The stop is at 13,262.5, targeting a move to 13,082.5. So that's it for me from the gun to head trade idea. As I say, I'll get that posted as soon as I can. The day ahead, we've had UK labour market report out already. That came out at 7 o'clock. Oh, sorry, that looks like a Tuesday figure. I'll double check with that. Key events over the next week. We've got US consumer prices on the 13th. UK consumer prices on the 14th, Bank of England monetary policy decision on the 15th. So really sort of going to be a busy week for the UK by the looks of things. Obviously this week of mourning the loss of the Queen, and that has also led to a bank holiday next Monday. So markets will be shut that day as well. So bear that in mind. Okay, thanks for joining me. I hope you've enjoyed the show and look forward to catching up again tomorrow. Thanks.